Welcome back. The House will vote tomorrow on a bill allowing bankruptcy judges to cram down mortgages and protect homeowners from lawsuits. Proponents say it's one step toward finding a housing bottom, but opponents, like some GOP lawmakers, say the process does not stop defaults and it could make the situation worse. We weigh both sides with Howard Glaser, president of the Glaser Group and a former counselor to the HUD secretary during the Clinton administration, and Terry Couto, partner of Newbold Advisors. Nice to have you on the program, gentlemen. Welcome.
Thank you.
Thank you.
So what do you think about this plan? Let's kick it off with you, Mr. Glaser. What do you think?
Well, look, loan modification efforts in the last couple of years have been an utter failure. The federal policy has been pretty please, won't you modify some loans? I'm in the minority in the mortgage finance industry, but I think that the nuclear option, which is what cram down is probably the only thing that will focus the minds of investors and servicers, and combined with the incentives in the Obama plan, get them to take advantage and do loan modifications, which I think will be in the interests of the servicer, the investor, and the borrower ultimately.
But what does that do to the banks? I mean, is that going to put even further pressure on the originators?
Well, you know, those loans, if they're not modified, will become foreclosures anyway. So under the Obama cram down, you would only write down to the market value. So you're no worse off if you take the cram down than you are in a foreclosure, but you'd be much better off if you take the modification. And an investor, a servicer, a lender would rather make that decision on the modification themselves than kick it over to a bankruptcy judge to make. And that's why I think it will be a useful tool.
Terry?
Well, I think cram downs are essentially court-ordered modifications, and I've been opposed to that, like most of the industry, for a long time. But you know, these are extraordinary times, and I think the old rules no longer apply. So I think if we can change the legislation to target that small segment of the population that's not being covered by existing modification efforts, I think it'll be successful.
Now, you go one step further, Terry, in saying that you want to see it limited, though, to just subprime loans. Why exclude other loan types?
Well, right now, you know, Fannie, Freddie, prime borrowers, they're doing making tremendous efforts to modify every loan that makes sense, where you have a responsible borrower who has the desire and ability to stay in their house. Now, they were a little bit slow to get started, but there are tremendous efforts being made, and it's all hands on deck to do that now. You know, but in certain situations, their hands are tied. They cannot modify certain loans because of contractual limitations. You know,
the problem with just limiting it to certain loans is that if you do that, then nobody else is going to get a modification because everyone in the industry will run just to the loans that are covered. So I think it's got to be a little broader than that if we're going to actually find a housing bottom through loan modification and take foreclosures out of the inventory.
Well, you know, but Howard, I mean, the banks might say, look, the administration is in some ways painting mortgage services and investors into a corner, you know, forcing them to modify mortgages at levels borrowers can afford or face having a bankruptcy judge do it.
Except for this, we have to look at the broader context of the housing plan. This is a big pointy stick, cram down, but there are also some fat, juicy carrots, including guaranteeing an income stream to the investor through a federal subsidy that will help pay the mortgage on borrowers whose loans are modified. So the best economic choice for the investor is likely going to be to do the modification anyway under this plan. You know, the Obama plan tilts the needle from making the modification to making the modification a better choice as opposed to the foreclosure or the bank cram down.
Terry, your clients are mortgage servicers, and you say they're doing all that they can to address this problem. How come we continue to see foreclosures rise?
Well, I mean, our clients have certainly struggled with getting the modifications ramped up. There's been changes. Now that there's some streamlining of the rules, that's helped tremendously. And there's, you know, thousands and thousands of modifications being done every month. The problem with opening this up to all mortgages is that I think we'll see a surge in bankruptcy filings. And bottom line, I think the servicers are better equipped to deal with this problem than the judicial system.
You know, Terry, I think that's right, but we just haven't seen that actually happen yet. And we're looking at, by anyone's estimate, 2.5 million additional foreclosures coming this year, and I think that's probably a good estimate. In the wake of, you saw this morning's numbers, 4.5 million home sales. So you know, you're pouring 2.5 million more units in while you're selling fewer and fewer. You've got to find that bottom, and people have to believe that there'll be fewer foreclosures, and therefore home prices won't decline as much, and therefore I should buy a house because the bottom won't fall out on me. And it's all got to work together.
Well, let me ask you this, Terry. Final question here. You think that these cram downs are going to exacerbate the banking crisis?
I think if they're not, if it's open to all mortgages, we have a real risk of that, because I think, one, it's going to wipe out second mortgages for the most part, which are maybe written down to nothing anyway. But then I think we'd see further downgrades of mortgage-backed securities, precisely because of what Howard mentioned. We're not going to know the cash flows behind those securities, so they're harder to value. And so I think if we keep it wide open, I think it is dangerous.
When will we see this take place? What's the timing on this, if in fact Senate passes it? Howard?
I think by the end of March, we could see, in effect, cram downs beginning to get into the system.
Gentlemen, thank you. We appreciate your insights. Thanks so much on this important topic. We'll see you soon. And FDIC Chair Sheila Bair weighing in on the housing crisis in a CNBC town hall event. Who's protecting our money? Here's some of what she had to say.